There have been a lot of changes in the real estate world in the last few years. In just the last 5 years alone, we've went from a strong buyer's market, with sellers more than happy to negotiate on price and occasionally closing costs, all the way to a strong seller's market, with buyers many times having to make offers way over list price to even get the seller to consider their offer. And now, as we wrap up 2022, we've returned back to a buyer's market. What's going on? It's Brad Reynolds, hashtag Think Nashville, Think Brad. And today's video is all about interest rate buydowns. With rates soaring recently, buyers more than ever need this information. So make sure you're watching all the way through as we walk you through some different ways we could help you minimize what you bring to closing. So what is an interest rate buydown? An interest rate buydown is an opportunity for a buyer to pay money up front at closing to help them minimize the interest paid over the life of the loan via a reduced interest rate. Let me give you a quick example. Let's say you're buying a place for $500,000. You're putting 5% down, or $25,000. You've got a 30-year note with a 6% interest rate. After you add in taxes and insurance, your monthly payment is going to be about $3,200 per month. Using an amortization calculator, you can see that over the life of the loan, between paying back the interest and the principal, you would pay right about $1 million total. Now, this is the fun part. This is where the rate buydown comes in. Let's say you buy 2 discount points to move your interest rate from 6% to 5.35%. That cost up front is going to be about $10,000 total, which over the life of the loan saves you $70,000. Quite remarkable. There's no magic formula for understanding each lender's cost and how they do what they do. No magic formula. So when you're shopping around for your lender, you're going to want to ask for a breakdown of cost and more specifically understand what do they charge for their discount points. It's not only going to save you a couple $100s a month, but over the life of the loan, the reduced interest paid is going to be phenomenal. One of the big keys is going to be thinking about how long are you going to be in the property. It's all about the payback period. If you're going to be in the property for just a few years, the money spent up front probably won't make sense to put out on the front end because you won't get it back on the back end. But if you're going to be staying at the property for, say, 30 years, like I said earlier, and you pay out $10,000 to save $70,000, that's something you're definitely going to want to look into. Now here's the really fun part. In this market, since things have changed so quickly recently, you're going to want to see if the seller can pay part or all of this for you. So if you're faced with a choice, you can either work on the price or ask for the seller to pay part of your closing cost via a reduced interest rate with those discount points. Go for the discount points all day long. If and when rates fall in the future, and I believe they will, you can always refinance. Remember my magic phrase, date the rate, marry the house. Date the rate, marry the house. Say it with me, date the rate, marry the house. To understand this more, I would go to LendingTree or bankrate.com and plug in different purchase prices, different interest rates, different down payments, whatever, and then pull up their amortization schedule. And you too will be able to see how much interest you can save over the life of the loan if you have a reduced interest rate versus a higher one. The next time we dive into lending, we're going to dive into the 2-1 rate buydown. This is different from buying discount points that reduces the interest rate over the life of the loan. The 2-1 rate buydown is a little bit different. Quick example, which we'll explore more in the next video. Say you have a 30-year loan. With a 2-1 rate buydown, the rate is reduced for the first 2 years of the loan. If you locked in at 7, the first year's interest rate is going to be 5. The second year's interest rate is going to be 6, and the third year through the year 30 is going to be 7%. This ultimately gives you a lower payment and time to adjust to having a normal rate and a normal payment within those first few years. Wrapping things up, here's where we bring this to a close. It is more important than ever to have an agent who understands these things. Anybody can open that door. Anybody can say, Bob, Sherry, Tom, whatever your name is, you should buy this place. Very few can explain all of the cost involved with buying a house. I feel like I can do it better than almost anybody in the game. Honestly, you should put me up to the task. If you've got someone you're working with and they're not up to snuff, you need to call me. These are the days where you've got to have somebody in your corner, in your back pocket, going to work for you and explaining things on the front end to help reduce costs on the back end. That's why I'm here. My contact info is below. Please reach out and we'll see you very soon. Cheers.